I bet you haven't even heard about what I want to tell you today. The world is on the verge of changes that almost no one talks about. While people's attention is focused on news, crises, and wars, preparations are underway in the shadows for an event that can reformat the global financial and banking systems forever. This shift represents a quiet but accelerating departure from paper promises and a return to real tangible assets. At the center of all this, of course, is gold, the only asset that has survived every crash, every currency catastrophe, every war, and every reboot. Perhaps we will see Bitcoin along with it, but this is only a guess based on the actions of the United States of America. Time will tell, but the driving force behind these changes is not only fear, but also the already existing regulation for this. Most likely, in the future, gold will be the foundation of the modern financial system, along with digital currencies. But make no mistake, this decision was not made spontaneously and not by chance, because the financial reset. This is a historical necessity. So what exactly will change with the adoption of Basel III? How will this affect gold and the financial system, and, most importantly, how can you use this information to prepare before it's too late? Let's figure it out. So, gold has always been real money, because unlike a currency that can be printed out of thin air, it is a scarce resource, limited. Which means it really serves as a means of saving. This has been the case for thousands of years, and that is why when a currency collapses, sooner or later, all currencies collapse. Gold always survives. The question is, will Bitcoin survive this financial reset? This question remains open, since Bitcoin is not thousands of years old, and it has never experienced such events. Today, gold has grown by 25% since the beginning of the year, but not only because people massively turn to it as a safe haven asset against the background of some crises or the expectation of crises. Yes, this is a reasonable solution. Protect your savings in the true form of values, unlike a currency that is constantly depreciating. But the real reason for the growth of gold is the change in the financial system itself, which few people notice. The US stock market has lost trillions of dollars. The dollar has weakened by almost 9% since the beginning of the year. And bond yields have risen sharply as other countries begin to sell American debt. Counterparty risk. This is a risk that is always present when there are two variables in the equation. No matter how safe this asset seems, if there is a counterparty, you are at risk. Whether it's investing in a company, in stocks, in cryptocurrency, or even your deposits in a bank. You trust the second party if you invest. The same goes for the national debt, but that doesn't mean that the other side can't let you down. Thus, any country that holds American government bonds, in fact, assumes that the United States will keep its promise and will not allow default for a long time. Counterparty risk can manifest itself in a variety of forms, for example, in asset forfeiture. Many countries fear that they will be next after the US confiscated Russian assets after the outbreak of war in Ukraine. They suddenly realized their dependence on US decisions, and that America could knock the ground out from under their feet at any moment. The fear of sanctions, combined with the inability of the United States to cope with its debt, or rather with the constant emission and depreciation of the dollar, caused an accelerated global movement away from dollar assets. More and more countries are starting to look for solid, tangible assets that can be trusted. This has become one of the growth factors of gold, and to some extent Bitcoin. Especially after BlackRock provided institutional investors with a convenient tool. Spot Bitcoin and TIFs. And compare how Bitcoin held up and how the shares of the same Magnificent Seven held up. Against the background of all these tariff uncertainties of Trump, clearly Bitcoin looked stronger. And this is where Basel III comes into effect. After the financial crisis of the 28th, regulators realized that banks did not have enough solid real assets to cover all their risks, which, of course, did not come as a surprise to anyone except, apparently, the regulators themselves. Although, it would seem that the Bank for International Settlements, which is the central bank of all central banks, should have noticed this imbalance and these excessive risks, unless, of course, it really did not notice them all this time. Or maybe everything from the very beginning was not for our protection, for the sake of protecting them and their entire system. When it was under threat, I don't know, but when the cracks became too obvious to ignore, they urgently needed a way to prepare for the new system. So the rules of Basel I and Basel II appeared, and now in 2025. Basel III. Perhaps this explains all the oddities that we observe in the paper gold market, from artificial scarcity to raids on physical gold by central banks around the world. Imagine that you buy a certificate for 1 kilogram of gold, but this gold is actually not available. In fact, it's as if you bought a piece of paper with a promise that you have gold, but there is no real value behind it. But when gold is really at your disposal, for example, in a bank or a vault, you are sure of its availability and value. That's what makes gold a reliable asset, not just a paper promise. This is exactly what the Basel III rule does. Also, paper gold is easy to manipulate, and it carries the risks of the counterparty, which we have already talked about. The fact that the name contains the word gold, and it is supposedly secured by a reliable asset, does not mean that the paper version of this asset is safe. This is a hard lesson that we learned during the mortgage crisis in 2000. True wealth is not promises backed by an asset. These are not mortgage-backed securities, they are not Greek government bonds, they are not paper gold. And it's not even a spot Bitcoin if. True wealth, this is the asset itself. That's why we say if you don't hold it in your hands, you don't own it. If not your keys, then the cryptocurrency is not yours. But those in power are already well aware of this. That is why they are moving away from us debts, and moving into physical gold, and possibly into Bitcoin. Recently, for example, Trump again remembered about cryptocurrencies, saying that it is urgent to become crypto leaders. Otherwise, China will overtake the United States. Now we are going through the life cycle of the dollar in the same way as we used to go through the cycles of other world reserve currencies, like the Dutch guilder or the British pound sterling. More than 1,000 tons of gold have been bought around the world per year. Countries such as China, Poland, Turkey, India, all of them are leading in this process. And not just because they are looking for a safe haven in a storm, but because they understand the bigger picture. A new financial order will come, and digital currencies and gold will be at its center. So how close are we to this point? This is where things get even more interesting. Although the new rules, known as the Basel III, mean huge changes for the global financial system. Many countries are already implementing these rules. However, the US has not yet done so. In fact, they should start implementing Basel III from the 1st of July this year. It is then that the largest American banks, which play an important role in the global economy, will be obliged to recognize gold not just as a speculative asset, but as a full-fledged, reliable asset of the first level, without which it is impossible to build a solid foundation. I'm just going to emphasize this even more for clarity. This is not just a small change in the rules, it is a real seismic shift in the financial system.